Alright, folks, welcome to this week's Forex commentary and market review. And yeah, this is the dollar index on 3 months time frame. But I guess before I continue, I'd say if you're seeing this video for the first time or you're a returning subscriber, kindly like and share, because I've kind of like been stuck in 420 23 subscribers for a while now, so I'm thinking why is nobody seeing my videos and stuff. And yeah, please like and share, okay, so more people can see this stuff. And yeah, this is dollar index on 3 months time frame, and the reason why I'm pulling up the 3 months chart is because we talked about this chart last week when we said the apparent draw on liquidity for this month would be the fair value gap, right? Also, we drew, we kind of like highlighted this dealing range from the high here to this low here, and mapped out the equilibrium price point of the range and say that's where we expect the markets to trade into at least. And the equilibrium price point of this range would be the close of the 3 months fair value gap. And we said premium levels would be, premium levels around here. That will be some level on the monthly time frame if you check it. So we said this is how we want to define the high time frame institutional order flow, because markets are currently at a discount at a key level, and the markets are likely to return into premium. And I also said you can use premium and discount to define the high time frame institutional order flow. You can use candlesticks, you can use data, of course. And when all of these things are put together, right, you're finding yourself in high probabilities situation where the markets can be one-sided for a while, right? So that being said, we talked about things that could likely happen on the monthly time frame. Initially, when I started, I said I wanted to see the markets return into a key level before we can expect a long-term or a sustainable continuation, because the reason why we always like to reference key levels is because if markets aren't trading from key levels, they are likely to be engineering liquidity. Okay, that's just what it is about. Okay, and that doesn't mean even if markets don't trade from key levels, they don't engineer liquidity. But at least when markets move from key levels, that move is likely to be sustained for a period. Okay, until they meet some objective. It depends on what time frame you're looking at. Okay, it really depends on what time frame, and if you're trading with the high time frame draw or not. So there are lots of moving parts. By now you should know that when I'm speaking, you should start thinking about scenarios when this could play out, when that could play out, and what I was trying to say. So we also talked about the fact that the markets could open and just trade into objective, because they sort of closed heavily bullish in the previous week. That's this week they closed heavily bullish, and we said we could likely see the markets just expand quickly into buy side objective and potentially into this high here, because this is low resistant liquidity rod. But of course, the markets would obviously choose its objective. We will just have to highlight it so we can use it to manage our expectations, right? And we still have this one intact. Okay, but our major talking point this week would be how the markets traded last week and what we are expecting the markets to do in the coming week. So first of all, just look at how the markets traded, and we'd see that on the weekly time frame, which obviously we cannot see now because the candle is obviously bearish. We'd see that the market opened on Monday. This was Friday's close, and this was one of the levels we're talking about, this inversion fair value gap and these consecutive down close candles here. So we said we would prefer to see the markets return here and rally into buy side. That's a lot more easier, but then the market has shown strength, okay, and markets could find buy side liquidity first, and that was how the market played out in the end portion of the week. And after the market traded into buy side liquidity here, we saw the market reject on Wednesday evening, and this actually set the stage for a return back into the range. Okay, you can see we have volume imbalance here, we have another volume imbalance here, and we have this fair value gap. So after the markets met objective, okay, markets are going to return into internal range liquidity. And what's internal range liquidity? Okay, and we have breakers, inefficiencies, or mitigation blocks. These are internal range inefficiencies. So this point of liquidity would be referenced after market meets objective, because they probably left pockets of inefficiencies, or probably their levels the market will just likely return. But majorly, market will always seek to rebalance inefficiencies when they trade into internal range. That's basically what markets would look for, inefficiencies. So we had inefficiencies all the way into this gap, into this level, and we just saw the markets just return back inside range. Well, I'm going to pull up I think chart on euro USD and pound, and there was somebody who shared their chart on Twitter last week. I think that was on Tuesday. I think he wanted to be long on euro USD, but that didn't pan out, and he made reference to SMT divergence and stuff like that. So I want you to note something, okay, if you're listening. First off, when we say the draw on the query, okay, when we say the draw on the query, it means ideally we want to see the markets trading to that level, all right? And the draw on the query actually takes precedence over how you want the market to trade, because I always say there's a difference between where the market is going and how you want it to trade, and that's why I like to distinctively define those two things. Last week we said the draw of the query is here, but we would like to see the market return into the range first. But also we noted that the markets could trade quickly into buy side. Then once market hits buy side liquidity, we could see the market return back here. And I also said while this level would remain valid is because we already defined the long-term higher time frame institutional order flow. Okay, we already defined the long-term trend market, saying that we mapped up the daily range on the monthly time frame. We graded premium and discount. After grading premium and discount, we said the markets are likely to return into equilibrium at least. So if the markets are going to return into equilibrium on the monthly time frame, it means on the near term or long term perspective, we are going to be bullish on dollar index. So levels like this, key levels like this, would likely hold for support, okay, in continuation of a bullish dollar, even after markets has hit buy side liquidity here. But I also said when markets hit objective, if we haven't traded back here, we could see the market return back into the range, because this move, okay, this move has an objective. If this hasn't met objective yet, you wouldn't see the market return back inside the range. Okay, for example, you can look at all of this price move here was for the market to completely rebalance this inefficiency after trading to buy side liquidity here. After the markets return, after the market rebalance inefficiencies, we saw the markets reprice into a discount. Although apparently the market left this pocket open for a breakaway gap, but you can see there is a inversion here. Okay, we have an inverse BC here. If you extend it forward, let's put it here. So we have an inversion BC here, and we have some sort of BC or fair value gap here. So the markets would define how the markets would want to trade. It's left for you to interpret, of course, because when we looked at this price action in Euro USD, we saw that Euro USD traded into its own inefficiency, but in form of an institutional order flow intro drill. But pound didn't trade on this particular week, because on this day that this happened, pound already had rebalanced its own inefficiency completely. So there was no need for pound to return back to this area of imbalance, because it had already rebalanced its own inefficiency. I said something again, the markets will move with respect to dollar index, but also based off of their relative strength. Okay, and we're still going to discuss a little bit about relative strength and how it influences SMT divergence. Okay, so we're going to study price action here, and studying price action here, you'd see something interesting. You'd see this was Tuesday's high, and market ran through Tuesday's high and began to break down, right? Okay, market running through Tuesday's high. Ideally, you'd want to see this move reflect in foreign currencies like Euro USD. You can see market ran below Tuesday's low here for Euro USD. Okay, but when you check GBP USD, okay, you want to look at GBP USD. This is Tuesday's low. This is Wednesday's low. You can see the market didn't run through Tuesday's low. So while we've seen markets go through Tuesday's low on euro, we weren't seeing the same thing happen on pound. Now let's look at what the euro pound was actually doing on Wednesday. While dollar index was bearish, so we are looking for Wednesday. All right, so this is Wednesday. I'll look at it through the daily time frame. Okay, so this is Wednesday's price action. You can see Wednesday's price action. This is bearish. Markets closed bearish. Market traded above buy side liquidity here, traded above Tuesday's high, and closed bearish. And also market created a fair value gap, and we have a balanced price range here. So we're seeing bearish euro pound dollar. Let's not talk about Thursday, please. This is Wednesday's price action, so you can see how euro pound closed bearish, meaning relative strength or relative weakness is on euro. It means euro USD is relatively weaker than pound. So that's why when euro USD was going below the previous daily low, pound was failing to trade below the previous daily low. Why? Because euro pound was what? Euro pound was bearish. Euro pound was bearish. So you can see how relative strength plays out. So while you're seeing that euro pound is bearish, it means you're seeing relative strength is on pound. So ideally, if you want to take setup, ideally you want to be looking at pound, because pound has relative strength in place, because euro pound is apparently showing weakness on its daily time frame, and it's willing to draw into internal range courtesy of that daily fair value gap. Right, so that's how relative strength analysis plays it into SMT. All right, so I hope you understand. So when we go to dollar index on the daily time frame, so now we've seen the markets completely rebalance inefficiencies, and someone actually made a post of this on Twitter. Very interesting post. I thought I wasn't aware. I just opened because I was awake. I think it was Wednesday 9th, because of the euro as a setup, of course. And what I said is pressuring to 50% of the weekly, the consequent encroachment of the weekly rejection block. I mean, 50% is the same thing as consequent encroachment. It traded into daily key level and formed a turtle soup and CRT. I had an issue with the CRT at first, okay, but it's fine. I said it said 4-hour time frame change staying delivery confirmed. We should trade back into internal range. Euro USD buy. Very beautiful stuff, and this is what I want to do on my Discord. Okay, because next year, like I said, and I mean, I think 4 persons already signified their interest to join the Discord next year, and it was exciting that people actually showed interest for the Discord. I mean, this is the kind of stuff I want to do on Discord, when somebody pull up their chat and a line talks about it like this, because they understand that this is how I want to talk about my chats. This is someone that actually understands me, okay? And because if you want to talk about chat, you have to be clear with what you're saying, okay? Something that anybody who reads it understands what you're trying to say. It's not vague. It's clear, because if it's not as clear as this, then it's likely not high probability. Okay. Most of the time, I said, when you're looking at the draw on liquidity, okay, or you want to trade the weekly draw, okay, you want to use the 4-hour time frame change in the state in delivery, okay, to validate that bias. Subsequent days you can day trade, but how can you define that the markets are likely to draw in the direction of weekly buys, you need the 4-hour time frame market structure to align, and that's what the 4-hour time frame change state and delivery gives you. Now, if you're trading prior to 4-hour time frame change state and delivery, then you're likely taking a bet that the market is going to reject from the scale level. That's what you're doing. But I don't want to stress myself, okay? I just want to take my trades. The best thing I'll do is just to increase my risk when I'm trading off of the change state in delivery. Just increase maybe 2% or 3%. I'll say 2%. 3% is actually too much because I trade most of my funds are proprietary funds, right? So you want to increase your leverage on levels like this, right? So and that's just it. And then I was talking about, this is good by the way, but be more nimble with the objective since it's against the overall bias. The markets can absolutely seek only near-term targets. I was referring to near-term target like this old daily lows. We have an inefficiency here, although this obviously you can discount it or discard. You can discard it, sorry. So if the trend is heavily one-sided, best practice would be to scale off entries at low hanging objective, meaning as price is expanding towards your target, you can start scaling off entries. Okay, and that's how to think. Okay, that's absolutely how to think. And you said you're very right. You talked about all of those things, and I was making reference to, we showed the setup here too, and I said look for old daily lows and overlapping with some imbalance on the hourly chart. There you have it. The fair value gap doesn't need to be a breakaway gap. It only needs to have been partially traded into before, and that requires a total rebalance. So what I was trying to say there is, we have levels on the hourly time frame where the markets, levels that need levels like here. This is old daily low. This is a fair value gap here. Apparently, market had institutional order flow entry drill. Okay, this is a partial rebalance of this inefficiency. Now that prices have met objective, now look at the consequent equation of this weekly rejection block. We've had it marked out for weeks now, expecting EURUSD to price into it. Okay, and now that markets has met objective, markets can reference inefficiencies back. We have a breakaway gap here, and we have institutional order flow entry drill here. So this becomes areas of interest for the markets to return back into. See, currently market didn't completely rebalance it. So this is what we have to contend with next week while we talk about, dollar index. So dollar index this week, I don't want to spend too much time on that. We have a weekly fair value gap. I think we talked about the potential markets create a fair value gap, but that was on GBP USD. Okay, we talked about it in pound, saying that we could see markets create an inefficiency this week. But just like we need the daily time frame, a daily bullish closure, for example, to validate the weekly buys, we also can use the weekly time frame to validate the monthly buys. So this is the first week of November gone, and we have a bearish close. Now, mind you, validation doesn't mean you are not sure or you don't know institutional order flow. It just helps increase the probability of your trades. Okay, that's just what it means. Okay, just like the way I said, you can take a bet saying the consequent encroachment of the daily level is likely to hold on Euro USD, and you take a bet there. But rather wait for the 4-hour time frame to validate the weekly buys. Okay. Now, mind you, this is absolutely a two-sided week. Okay, there were setups that could take you here in the start of the week, and after the market met objective, there were also setups that could return you back into the range. So this is a very two-sided week. So I think I would allow you to study that on your own, right? So we have a fair value gap here. Ideally, we want to see the market return into this gap. Okay, it seemed pretty obvious. We want to see the market return to this gap, and we want to be patient because one of the major talking points of last week's trading was patience. We wanted to see the markets return back into range because, for example, I set up I was holding on pound from previous week, so I wasn't really interested in adding more shorts because we're already at premium levels. So I was more interested in, okay, where can I go long on foreign currencies if they're gonna return back into range, because the market can as well continue to blast through. I mean, markets can absolutely do what markets wants to do. The only reason we went long on euro is because we had validation on the 4-hour time frame. That's the only reason. If anything had happened from there, then it happened. I mean, that it's trading. Things happen. Market can give you false signals, and and you just take your trades and you take your loss. It's very, very normal. Okay, the main thing is not to lose your shit because you took one loss. So we have a gap here. Ideally, we want to see the market return to this gap and trade. And how the market trades and closes this coming week will determine if we're going to see. It's going to determine the rest of November's trading actually. Okay, or the previous or the next week after this coming week, because ideally I'd like to see the markets close really bullish this coming week, because when we see heavily bullish candle closure, it's already you know locks in on this liquidity pool as the draw. Okay, so I want to see the market trading to previous weekly low. I want to see how the market trades in this gap. I want to watch the daily time frame. I want to watch especially the 4-hour time frame. So if you get the change in the state in delivery after market trades into this gap, then it's something we want to engage in and aim for buy side liquidity here, and all of the levels we highlighted on the monthly time frame. So this is Euro USD. Now that we've traded into the consequent encroachment of the weekly rejection block, and obviously market left nothing here, absolutely. Okay, trading into this range. This is efficient trading. Okay, this is efficient trading. Market is not leaving any imbalance and stuff, and this kind of price action is very frustrating. Okay, this is efficient delivery of price. You can see markets are not leaving any space, any pocket for inefficiency, and it's simply because euro pound is bullish. Okay, because euro pound is bullish and dollar index also is bullish, so we are seeing this weakness in euro USD in its delivery of bearishness. Okay, so that's what's really happening. So that's why you need to be able to contextualize all of the things happening in markets. You don't really need to know. I don't know. I'm trying to find the word for it. Everything you need is actually in candlesticks, is in the chart, is in core concept like relative strength analysis, and all of these things. If you just study, okay, if you just study, and so we don't necessarily have a level I can highlight, except this is an immediate rebalance here on the weekly time frame, market trading into a previous low. Okay, a previous low is a premium level. Okay, this is a premium level, and I wouldn't need it to show on the 4-hour time frame because I already have a better level highlighted on the 4-hour time frame. So on the daily chart, okay, on the daily chart we have these consecutive upward candles. Okay, this is the bearish order block. Markets are currently at the bearish order block. Now I don't know how this is going to pan out because we already said dollar index, we need dollar index to trade into the weekly fair value gap. I don't know how this is going to pan out exactly, but what I do know is that we are going to wait for the 4-hour time frame to validate buys, and then we're just going to engage because markets are currently at key levels. Okay, that's what you should note. Markets are currently at key levels. Okay, markets are currently at key levels. So nothing too much on the hourly time frame. See the 4-hour chart. This is change staying delivery. This is the close, and yeah, I saw a comment on Twitter saying they were waiting for the markets to return once there's a change in state in delivery. I told you there are about 2 ways for you to engage. The first one is you buy the next candle. Like in this case, you immediately buy the next candle, because what change in the state in delivery means is that whatever time frame you are looking at it from already aligns with your weekly draw on liquidity. I don't want to say weekly buys, just say the draw on liquidity. Or I don't want to say institutional order flow. I will just call it draw on liquidity because sometimes they overlap, and sometimes they kind of like they diverge sometimes. So you can buy the next candle, or you wait for the markets to return into this series of down close candles and you buy it and you place your stops here. This is ideal stop placement, not here, here. If you say, oh, I can manage 25 pips stop loss, then don't stop trading. Okay, don't define what the markets are likely gonna, I don't know, don't define market invalidation. Just trade what you see And now we have this low taking sell side here. So this is high resistance liquidity run. So this is a proper, you know, level to place your stops. Okay. Anyways, we're back at stop placement. I don't know everyone's P with stop placement. I mean, just place your stop how the market is showing you. It's the same way it happened here. You know, trying to minimum. Oh, you have to get over your greed really, and see that the issue is cap. Once you have cap, all of this stop placement will matter, because you can put a 100 lot size on this kind of trade if you have large cap and place your stop, and you're still going to make a lot of money. So it's cap. So stop trading based off of your lack of money. I mean, start training yourself, because if you don't train yourself now, you won't do well when there's a lot of money. It's scary when you trade large funds. It's actually very scary, because when you take the money and sing your piano read, you're gonna shit on your pants, because you're always looking about money, but it's not really about trade the market. Stop. I'm very sure I'm talking to someone. Yeah, I'm very sure. So you can see how the market expanded. I took my own profit here, and I didn't engage here except on pound on Friday. So so this was Wednesday's close, this Thursday's price action, and this Friday market returning into this daily inversion fair value gap. I think they can likely return here. I don't know, because you know, we already have this level highlighted on the monthly time frame saying pound is likely to return into the proportion candle, and markets are likely to return here into this inefficiency here, and you can see how bullish this candle is. And one of the reasons why I said, you know, that the person who posted CRT, I can show you a number of places this week where the supposed CRT failed, and that's why I always try to tell you guys that you should focus on the high time from institutional order flow. If you focus on patterns like CRT, you're gonna miss a lot of big pictures, because you're just trading a singular candlesticks and you're leaving a lot of meat in the bone. And just trade support and resistance, or trade patterns and channels. Okay, if you know you seriously do not want to learn how this market move, not CRT. It's kind of like, okay, I have to, you know, I don't like the fact that I have had to repost something with CRT. Okay, I've undone the repost. I mean, it's done its job. It's actually kind of like, it feels like I'm trying to promote what Romeo is doing, and Romeo is not a gentleman. Yeah, he's not a gentleman, and I don't want to associate myself with him. All right, so this was the daily inversion, daily fair value gap, and market returned back into it. And on the 30 minutes time frame, you can see what happened here. Okay, so market returned back into the daily inversion fair value gap. Let me have it highlighted on. So on the 30 minutes time frame, you can see the market returned back into the inversion. I'm sure if someone who just quickly engages and says, because this is a change in state in delivery, I'm not going to lie to you, this is a change in state in delivery, and you probably wait for market to return here and you buy it, and this is what's going to happen. Okay, you know, I said market has to trade into key levels unless it's susceptible to a liquidity run. Okay, depending on the time frame you're looking at. So market traded into this daily level, traded up, failed to close through here. Then in New York session, we saw the market close above this consecutive downward candle, and we have a bullish order block. And if you look closely here, we have relatively equal highs here. So you buy the order block, rally into relatively equal highs. Very easy setup, and that's what this setup was on Friday. Okay, you can see it. Very kind of like very easy setup. Markets drawn liquidity on Friday, market returning to the order block. Quite the easy setup, quite easy. So that was Friday's setup on the pound. Thursday setup was really just the 4-hour time frame changes state in delivery. rally into this objective here, but I collapsed my trades here. I was going to aim for the midpoint here, but I was already exhausted that day. I had a field day on the market because I had trades running on equities market, and it was really, really frustrating because held it through um, I held it through Wednesday into Thursday, I guess, and the markets began to reverse. I had to close all of those trades after, I mean, I left a lot of money on the table. Should I have closed? No, I shouldn't have closed because I needed market to get to a point so I can close partial profits. But market never got there. So, but then it was a lot of money I left on the table. So it was kind of frustrating. It was very, very frustrating. Anyways, so that was how I internalized last week's price action, how I engaged, and yeah, I hope you found this one insightful too. And until the next one, I'll be safe.